How do you calculate if you're truly wealthy? You're probably adding up all your financial capital, which includes assets you own, like your home, investments, and savings. But if you look at your economic net worth instead, you might be a lot richer than you think. Hi, my name is Caroline Maughan, and I'm a portfolio manager at Claret Asset Management. In this video, I'll discuss the relationship between human and financial capital and how to manage financial challenges at different stages of your life. As you age, wealth and risk change significantly. When assessing your finances, it's important to not just consider your financial capital, but also your human capital. These two elements combined will give you a measure of your total wealth or economic net worth. So what exactly is human capital? It measures the present value of your future earnings. It's the value of your knowledge and skills on the job market and the stability of your income throughout your career. Different professions carry varying degrees of income stability. For instance, government workers and teachers often enjoy a more predictable income than race car drivers or someone who is self-employed. Human capital can be seen like its own asset class with unique characteristics and risks. For most individuals with high job security, human capital can be seen like a bond-like asset, paying a predictable stream of income over time. When you're younger, you're more likely to spend time and resources investing in knowledge and skills to build a career. At this stage of life, it's harder to build up savings, accumulate assets, and grow your financial capital. Human capital tends to be a substantial part of a younger investor's economic wealth. Consequently, there's a greater need to protect yourself against risks that affect your human capital. A predominant risk younger investors face is earnings risk. This is the risk of losing the income you or your family depend on to live. This can be triggered by health issues or becoming suddenly unemployed. Earnings risk can also have an effect on your financial capital if you must deplete the assets you own to make up for the loss of income. A proven way to mitigate earnings risk is through purchasing insurance or building up an emergency fund. Another way of managing human capital-related risks is by optimizing your portfolio's asset allocation. Consider the scenario where a substantial portion of your portfolio is heavily invested in the stock of your employer. In the unfortunate event that the company underperforms or even worse, goes bankrupt, or you're let go, your overall wealth would decline significantly due to the simultaneous loss of income and the decrease in value of your stock holdings. Also, if you're a highly specialized petroleum engineer, your economic net worth is already heavily invested in the oil market. You'd want to compensate for this risk by investing in industries or companies with little or no correlation to the energy sector. And if you have a job with an unpredictable income stream that can change month to month, like a real estate broker, you might want to compensate for this volatility by investing in industries or companies that are less volatile, with stable dividend and interest income, and that are uncorrelated to housing transactions. As you advance in your career, accumulate assets, and have fewer years of work left before retirement, your financial capital will become increasingly more important than your human capital. Investors usually begin thinking about retirement and tax planning once they've accumulated some level of financial capital. At this stage of your life, you'll want to focus on mitigating risks that affect your financial assets. For some investors, this means increasing the portion of their portfolio allocated to safer investments. The later years of retirement can often be quite unpredictable. No one can predict how much time they have left. Older investors face longevity risk, and the big question is often, will I have enough money to live comfortably until the end of my days? To mitigate this risk, some people will choose to work more and retire later, live a more modest lifestyle, or purchase annuities. Understanding how your wealth and its associated risks will change over the course of your life is instrumental in crafting a comprehensive financial management strategy. Your economic net worth can help guide you and your family's changing needs. For more information, visit our website at claret.ca or get in touch with us directly by clicking on the links in the description. And don't forget to click the subscribe button below.